Hi there, this is Sean Broderick for UncommonWisdomDaily.com. In last week's video, I told you how the government is flooding the market with liquidity to inflate away its problems, and how this could be bullish for both stocks and commodities. How bullish? The answer may astound you, but we also run an incredibly bearish risk as well. First, let's look at what Wall Street is expecting. The ratio of insider selling to insider buying hit 30.6 in August. That's the highest level since Trim Tabs began tracking the data back in 2004. That's bearish. What's more, Trim Tabs Demand Index, which tracks 18 fund flows and sentiment indicators, has also turned very bearish for the first time since March. So obviously, the big money thinks that stocks are at a top. Why would they think that? Look at this chart that I picked up on the Big Picture blog, showing the average track of the past 19 major bear markets globally. This chart shows that most bear markets fall apart in the beginning, hit a bottom, then rally, then top out again and retrace at least part of their decline, a second drop of about 25%. So the big money thinks the jig is up. That's one way this could happen. Now let me show you an alternative. The next chart from Bloomberg shows that the US S&P 500 overlaid over a chart of the big Japanese bear market that started in 1989. This uses a longer-term chart of the S&P 500, marking its peak in September 2000. You can see that this pattern is extremely similar. If the U.S. continues to follow Japan's path, we should see this rally continue for about another 40% higher from here. This is not what the big money is expecting now here in the U.S., but I doubt they were expecting it in Japan either. Now, it's not right to say that what the U.S. is experiencing now is just like what Japan went through then. There are big differences. But one of the similarities is that both Japan and the U.S. tried to paper over their problems with money rather than fix the underlying causes. What we are seeing now is what happens when the government throws money at problems with monetary and fiscal policy. Another huge bubble can be created. So, maybe the insiders are right. Surely most of recent history is on their side, and we're due for a huge sell-off. Or maybe the Japan scenario is more likely. After all, there is no bigger money than the U.S. government, which can print all the money it wants. In that case, we could see the markets continue to head higher from here as fund managers chase performance and the bears gradually throw in the towel. One thing's for sure, all that papering problems over with money should undercut the U.S. dollar and boost gold. A market melt-up could also be good for select stocks. This is Sean Broderick for UncommonWisdomDaily.com. Good luck out there and good trades.